Let's get to the big story breakdown. Well, efforts to pass crypto market structure legislation in the U.S. are gaining traction after the Senate Ag Committee released bill text, including measures favorable to DeFi. However, observers do say the bill still lacks enough Democratic support to pass. But bipartisan support is needed, and the Ag Committee is scheduled to hold its markup next week, while the Banking Committee has stalled for now. But as 2026 gets underway, CoinFund has polled portfolio companies to gauge sentiment on the crypto market outlook for the year ahead. Well, joining me live here at the New York Stock Exchange with the big picture is Seth Ginns, managing partner and head of liquid investments at CoinFund. Seth, good morning. What a week it's been. Thank you so much for joining me.
Of course. Thanks for having me.
Well, first and foremost, let's start out by looking at the first 23 days of 2026, given all the volatility we've seen around the world. But you speak to stakeholders and focus on portfolio companies as well. So what do you make of how we've started this year?
So while you look at crypto prices and you see a lot of volatility, it's really interesting in the background. The convergence of traditional finance in crypto, traditional corporate America in crypto continues apace. I think there's a big difference between what we've seen in prior volatile periods for crypto, where a lot of the software development was happening just within the crypto ecosystem, and as prices came down, you saw that activity slow. Now with this convergence happening, you're seeing that development continue apace. I think we're going to have a lot of really interesting announcements. We're sitting here on the New York Stock Exchange floor, and just this past weekend, we had an announcement from the New York Stock Exchange, 24/7 trading, powered by tokenized equities coming later this year. So we're seeing a lot of positive developments.
Yeah, and Seth, you and I are here at the center of TradFi at the New York Stock Exchange, and you just touched upon that announcement we got as we kicked off the trading week. And yesterday here at the New York Stock Exchange, BitGo went public.
That's right.
So given all of these developments, do you think this is the week that tokenization went mainstream, or do we still have a ways to go, especially with Ondo and BitGo? Tell us what's going on.
So Ondo is a protocol that lists tokenized equities. So they take traditional equities and they wrap them in a token wrapper, and you can buy them for people who are offshore outside of the US who wouldn't typically have access to equities. There's another company, Superstate, actually one of our portfolio companies as well, Ondo is a portfolio company too, that announced yesterday an $80 million raise. They're actually doing primary tokenization. So they'll raise capital directly for the company through token markets. So you're seeing a breadth of tokenization initiatives from the exchanges to primary and secondary issuers, all coming together right now, which does look like we're hitting this inflection point.
Yeah, and speaking of that inflection point, we're only 23 days into the year, and many issues of outlook are already coming to play. So what do you think we'll see in 2026, and what impact will it have on both institutions as well as retail investors out there?
Well, I think broadly in crypto, we're seeing the number of ways to access crypto materially expand. So this morning we had UBS announce that they were going to start giving access to crypto to their wealth management clients. Morgan Stanley a few months ago. Obviously over the last few years, Franklin Templeton, BlackRock, big players in the space, issuing ETFs, broadening out their engagement with the space. So I think when you look at the macro factors that typically correlate with crypto, they point to prices being materially higher. Bitcoin has obviously lagged gold by quite a bit. It's lagged global liquidity. It's interesting, if you look at Bitcoin's price relative to global liquidity, we're back at FTX lows. So Bitcoin versus global liquidity. And, we had a flash crash in crypto October 10th. And that hurt a bunch of the market makers in the space. Yeah. We believe they're near the end of healing, cleaning up their balance sheets. That could be the catalyst that drives Bitcoin and broader crypto back to what you would expect to be the price levels tied to where gold is, where tech equities are, where global liquidity is. So I think we're set up for a very interesting year. Yeah. And then the fundamental dynamics, as we were talking about with tokenization, astounding.
Yeah, and you hit on a lot of moving parts here. So as we head into the new year, we do have to pay attention to so many things. But while we're talking about the bigger picture, where does regulation come into play?
So I think the Trump administration was a material change for the positive for crypto regulation. Started out with a bunch of executive orders, but executive orders only last through the administration if you end up having a change of party in the next administration. So the key has been executive orders, a favorable regulatory environment. We've seen the SEC and the CFTC do complete 180s and turn quite positive for crypto. We got the Genius Act last summer, so a stablecoin bill with broad bipartisan support, paving the way for continued growth of stablecoins. Treasury Department talking about over $2 trillion of stablecoins by the end of the administration. Now it's about getting the market structure bill passed.
And finally, Seth, before I let you go, you speak to many stakeholders out there within the ecosystem, both in the U.S. as well as overseas. And given the fact that institutional adoption is a theme that all of us are watching, where do you think the real innovation is happening that will drive growth, not just this year, but beyond?
Well, I think what we're going to see over the long run, you had internet funds back 25 years ago, and then that internet technology just became a core foundational technology for the broader economy. I think we're going to see the exact same thing for crypto. So what we're certainly seeing is a broadening out of engagement with crypto. And the next 2-3 years, we'll probably see broader corporate America look at incorporating crypto for payments, for capital raising, for Web3 privacy preservation, in a way that makes it just a ubiquitous layer of tech rather than a particular vertical. So I think we're at that mainstream moment.
Well, it was wonderful having you on the show, Seth. I appreciate your time, and thank you so much for sharing your perspective and all of your insights today.
Thank you, Remy.
Thank you.